So in this video, we are going to learn about time frames and top-down analysis. Price action works on bigger time frames. If you try to trade pin bars or engulfing bars on 5-minute time frame, you will lose your money because there is a lot of noise on smaller time frames. And the market will generate a lot of false signals because of the hard battle between bears and bulls. Besides, there is no successful price action trader who focuses on 1-minute time frame to analyze his chart. Maybe you have heard of the term top-down analysis, which means to begin with bigger time frames to get the bigger picture, and then you switch to the smaller one to decide whether to buy or sell the market. Let's say you want to trade on the 4-hour chart. You have to look at the weekly chart first and then the daily chart. If the weekly chart and the daily chart analysis align with the 4-hour chart, you can then take your trade decision. And if you want to trade the 1-hour chart, you have to look the daily chart first. This is a crucial step to do as a price action trader because this will help you avoid low probability setups and it will allow you to stay focused on high probability action signals. Through our top-down analysis, we will analyze bigger time frame and look for the information we are going to trade. The most important is support and resistance levels. These are areas or turning points in the market. If you can't identify them, it is going to be a big situation. But if you can identify them on the weekly chart, you know what is going to happen when the price approaches these levels on the 4-hour chart. So you decide either to buy or sell or ignore the signal you get from the market. The market structure. The weekly analysis will help you to identify the market is trending or ranging or the market is choppy. In general, you know whether the big investors are doing buying or selling, and you try to find a way to follow them on the smaller time frames using price action strategy. The previous candle, the last candle on the weekly chart, important because it tells us what happens during a week and it provides us a valuable information about the future market moves. When you identify these points using the weekly chart, you can now move to the daily chart or the 4-hour chart to try to gather information such as the market condition, what the market is doing on the 4-hour time frame. Is it ranging or is it choppy or is it trending? So these are the questions you need to ask yourself when you go to the 4-hour chart. If the market is ranging, trending or choppy, what are the most important keys on the 4-hour or the daily time frame? This is another question you need to ask yourself. What are the important key levels on the 4-hour chart time frame? This could be support or resistance. This could be a pin bar, an engulfing bar, or an inside bar. So let me give you an example to try to help you understand why is it important to adopt the top-down analysis concept in your trading method and what is going to happen if you don't look at the bigger time frame before switching to your primary chart. Look at this example. So as you can see, the market on the weekly time frame was trending up, and then when the market reached the resistance level, this is a hot point in the market. So this is our first analysis. The second analysis, this is the market got rejected by sellers immediately when it approaches that level. This indicated that there are sellers there and they are willing to short the market. What confirms our analysis is the information of the inside bar force breakout. So this indicates a reversal. Now let's switch to the daily time frame to see what is going on in the market. So this is a daily time frame. The market here on a daily chart, we have a clear pin bar candlestick pattern that indicates a bullish signal. If you focus on just one time frame to make your trading decision, you buy the market because there is a clear pin bar signal. But if you analyze the weekly chart, you know the market is going to go down and there is a powerful key levels that will stop the market from going up. So this is better to think of selling the market if there is a clear signal rather than to buy it. And then look what happened to the next. So this is for after some time. As you can see, the top down analysis works. The pin bar candle signal didn't work, and because the weekly resistance level was a powerful turning point that refers to the direction. If you want to trade price action based on one time frame, I highly recommend you to stop trading because you end up losing your entire trading account and you will never become a successful trader. Trading counter trends is very profitable as well, but without top down analysis, you put yourself in a big trouble. Let me give you another example to show you. So, the daily chart, this is the daily chart. So, we moved from the weekly to the daily chart, and the daily chart confirms our weekly analysis. And there is a bearish signal near the weekly resistance level. The pin bar was rejected from that level, and there is also a formation of a inside bar breakout. So this is a clear indication of a trend change. So the trend is now changed. Let's switch to the 4 hour. So this is a 4 hour time frame. The example above shows that the counter trend works. If it is well mastered, it is a contrarian approach that requires experience. So if you are a beginner, I highly recommend you to stick with the trend. Try to practice as much as you can the top down analysis concept with the trend. And when you master trading with the trend, you can then move to the trade high probability counter trend setups. So there are many approaches used to time the market trends and plan trades. The most of these approaches lead to the greater confusion and lack of confidence in the results. Keeping the analysis simple is the most and the best way to go. And the top-down analysis is one of the easiest approach. You have already seen that, and I recommend you to master it if you want to trade the right way. What you have to do right now is to open your charts and try to practice what you learn in this chapter.